Hey guys, welcome to today's price action analysis video. This is the price action analysis of the 3rd of June 2022 and we will be analyzing Nifty first today. So on the 3rd of June, that is on Friday, the previous trading session, that was day before yesterday, we saw that the price had gapped up open. The moment that happens, there is something that you should know very importantly. You can see the previous day it has bounced and it was a volatile day. So you could see that there was not a single direction that the market was in. uh, Initially it went down. You can see how this opened with a red candle, then it went up, again corrected, then it went up. Here again gave a good correction and then went up. So the although the trend was upwards, but there was not a clear direction that the market was giving, right? It went up and down, up and down, up and down, and eventually, although the trend was in a way upwards, but still that trend was not clear. And here what had happened was a lot of traders had gotten their SLs hit. A lot of traders had probably not been able to enter also, and those who were bold enough to enter in such a market, they must have gotten their SLs hit. And you can see how volatile this day was. And though Nifty opened and closed much higher than the open price, the trend being upwards, that still did not indicate it to be a non-volatile day. So it was a very volatile manner in which it went up. So there was no smooth movement to Nifty which normally we see. And then fast forward to the next session, that is on the 3rd of June. Now imagine you see yourself facing a green candle. Let me just take away these other candles and explain to you the first candle first. You can see here that it has gapped up beyond the R1, and you can see that the R1 and the PDH were quite a bit far apart here, right? And they were not really very close. You can see many times that sometimes the PDH is like this, then the R1 is either here or it is below it like this, are they here? Or then it is a little bit further away. So let's say if this is the PDH, the middle line, then the R1 is kind of here, or it's below it somewhere kind of here. But this time on this particular day, there was a big gap between the PDH and the R1. Okay, so here on this day, even if the PDH was broken, the R1 was by itself a very important resistance. The R1 and the PDH will usually act as twins, and the R1, if the on such days when they are far apart, then even then if PDH is broken, you cannot be sure that the R1 here will also be broken. So now here you could see that R1 and R2 had a big gap in between, right? And the gap up here was something like this. So if you measure the closing price here on this day and the opening price on this day, it was around 125 points. And that gap up indicated to all those traders who had missed out on the previous rally, those traders who were suffering from FOMO, that this day is going to rally as well. Now the traders who were suffering from FOMO and those traders who actually could not enter, and as well as those traders who could enter but got their stop losses hit, they were all suffering from FOMO. And plus the traders who actually were long since the previous day. Okay, so those who are holding on to long positions on the previous day, since the previous day, that is. So they had big profits, right? So those traders who had open long positions since the previous day had big profits. And looking at this particular candle, those people who actually are aware of and are knowledgeable enough in terms of trading on pivot points know that the first candle did not break through the R2 pivot. And when other traders who either were suffering from FOMO because they could not enter the rally or got their stop losses hit, and those greedy traders who had made profits on the particular day, which was the prior to this one, the 2nd of June, as well as they wanted to make profits even today, thinking that there would be a big gap up and so this day would also rally. They were all targeting this particular candle here. So the moment this candle happened, the traders suffering from FOMO plus the traders suffering from greed plus the overnight positional traders who were holding longs since the previous day, all those people were watching this particular green candle. Okay, and now keep in mind what I've just said. Okay, and check out the second candle. Now the second candle itself here does not close outside the range of the first candle. Okay, it closes outside the R2 pivot, yes, but it does not close outside the range of the first candle. So now looking at this candle again, those people who trade on R2 or other pivots would think that the R2 pivot is broken. But here, as I've already explained and always explained in every analysis video, that the R2 pivot or any pivot, when it's broken, it has to be broken by a candle close which is outside the previous candle's wick, and the blue line here is the previous candle's wick. So if you wanted to have a closing which was a breakout closing, it should have been like this, or it should have been like this, but it was not the case here. The closing, as you can see here, was not outside the previous candle's high that it had made, which was this line here. So now unless that level was broken, which was the high of the previous candle of this first candle was broken, there would not be a breakout out of the R2 pivot, because the first candle was taking resistance at the R2 pivot. Okay, and here it is very important to analyze what kind of psychology buyers and sellers have. Those people now in the second candle who have seen the second candle close outside the R2 pivot, and those who are greedy and those who are still holding on to long positions, they will immediately jump into the second candle itself after watching that the R2 pivot is broken, not understanding the fact that the wick here has not been broken. And then you can see that there's a doji here. Okay, and so you can see how R2 pivot has been broken as a resistance by the second candle, and then there's a doji which is taking support as at the R2. This is what face off it looks like, but you obviously know, if you're following this channel for a long time now, that the wick is important. The wick should not be sidelined. The importance of the wicks should be taken and must be taken into consideration, because the wick here has raised the R2 pivot to this level now. And so the R2 pivot, although here it might look to be broken, is not yet broken till this particular level is breached. Now let's check what happened in the next candle here. And boom, there you see that there is a big red candle, because all those traders who had gone long on the second or the first candle itself had their SLs below the pivot now. So they had their SLs below this particular green candle, which is this is the second candle, which looks like a hanging man candle. This is a hanging man candle, right? So those of you who are new to my videos or to price action, let me just write down this name here. If you have not studied price action, please go ahead and study it. This is a hanging man kind of pattern, and now you can see that this pattern here has led to a big red candle, and then there's this candle. But now, has this red candle broken out of the first green candle? Now I'll tell you why the first green candle's low is important. See, there are traders who are long since the previous day, right? And those long traders who are holding on to their positions are positional traders who are long since yesterday, that is on the second. So then they have now added on to their positions looking at the first candle, thinking that the first candle is also green. So now the day is going to rally like yesterday. So they are holding their longs here. Plus there are traders who are suffering from FOMO. So all those traders plus those traders who have made profits on the previous day are suffering from greed now. And all these type of traders, which is a massive number, have gone long in this particular green candle as well as the second candle when they saw that the R2 pivot is broken, supposedly. And now the price has reversed and now is kind of going and hitting back to their SL areas. But now you can see here that if I mark a line here, then see, here is now where the low, the SL is going to be, right? This is where the SL of the long traders is going to be, below the low of this green candle. But now, has any candle actually closed below the low? No, this candle has not closed below the low. So you want to pull the line down here. Has this candle closed below the low? It has not. So you want to pull the line down here, because you want to match every candle's wick now. And then you want to see if there is any candle that closes outside that range. Has this candle closed? No, it has not. It has also made a low here. So this wick here, after this wick, you can see that there is no closing. There is still a wick, so you want to extend that line down. Again, this candle, which is the 1015 AM candle, has it closed below? It has not. So you want to extend this wick here, okay, below it. Now there's a weekly pivot coming below it. Now let's see what happens later. Okay, now you can see that this particular candle, this is the first full-blooded red candle that has actually managed to close below this particular wick. So now why is this important? This is important because now price action is showing you that in this particular candle, buyers are no more active and they are exhausted now. So buyers are no more adding on to their positions here, and now they are starting to give up because they cannot anymore take the losses that they are taking. These FOMO traders want to participate in the rally which they think might happen from here, so they are jumping in, and the greedy traders who have also jumped in. Now these traders cannot take any more losses because all their SLs are in this position, and now within this position their SLs are being taken, but they are still averaging and pushing the price up in every candle. Here you can see how there are wicks closing below the previous candle's close but no close below the previous candle's low. And you can see how the price had actually gone a little bit upwards and then came down again. Okay, and this is the first candle that shows us that there is a convincing close outside the previous candle's wick, which is this candle's wick. So now all these FOMO and greedy traders want to rush to exit their positions because they are long here on the high of this candle, and now this is where their SLs might be up to this point. Okay, so they are now trying to exit their positions. Plus now you can see that there will be some traders who are long since yesterday. So all those traders who are long since yesterday, when they see price coming backwards, they don't want to lose all their profits since yesterday. So they now want to start closing their positions in profit. So profit booking will start here, and all professional traders know that after such a rally there is going to be a certain amount of profit booking, which is going to be a substantial amount. This is where the rally actually began, right? This is where the buyers came out from. So now can you imagine this? If you measure this, then you can see that the level from the previous day low, which is around this point, to the high of this particular candle, how many points is that? Let's measure it. That is around 350 points. So can you say that here at 350 points buyers will still have the same steam left in them that was there up till this point or at this point here? They cannot, because they are buying since here right up to this point, and now they're exhausted. So obviously this rally is going to stop somewhere and is going to fail somewhere, and that is what you should be waiting for, to hunt stop losses. That is where you should be waiting for to benefit from trapped traders. Who are trapped here? Bulls are now trapped. Why? Because of greed and fear, the fear of missing out. And those long positional traders who are holding their positions, they are also greedy. So now all of them will want to exit their positions. And when that happens, I had tweeted about this, that the moment there is a breach of the low of this candle, then there will be a serious fall to the downside. For the nth time I'm repeating this, those traders who have missed out on this rally or have gotten their SLs hit in this rally are suffering from fear of missing out. And those traders who are greedy and those who have made profits on this day have become greedy and they want to make more profits out of it, so they go jump into this particular green candle, as well as those traders who are positional traders holding on to their long positions, or swing traders who are holding on to their long positions since yesterday. They also think that the market is going to rally, so they give themselves a particular percentage points of today, and they say that okay, I will hold my position, I will jump into my positions, I'll add to my positions here, and if the market tends to reverse from there and my position starts to go against me, then I will exit that position today anyway in profit, because I have been a part of the rally since yesterday. Okay, and so that is why all these people who are cumulatively in a huge long position have all gone long, and all of them have a huge number of stop losses below this particular green candle. And that is the reason why when price reverses and takes out the low of this green candle, there is a colossal fall in the price, because all those stop losses when triggered will trigger a huge sell order. That is a sell order. Why? Because for all the newcomers to my channel, I'm explaining, because when you buy here, you're placing an opposite order here, which is your stop loss order. And what is the stop loss order? It is a sell order. And so that is the reason why there is a massive fall to the downside. And so as you can see here, let us just see how price came falling after that. It did show some resilience there in Nifty, but the direction was anyways downwards. You can see how there was a big pullback here, but never really showed any strength, because you can see that very small green candles were happening there. They were, I mean, price action was peppered with a few green candles, but overall, noticeably, there were big and big red candles only. So you can see how price action went up to the end of the day, and till end of the day, the price was actually simply falling. So apart from this particular correction that we saw here, there was no real indication that price might reverse and break the day's high here at this point. And so I hope you have now understood why price fell so much in Nifty and Bank Nifty on the 3rd of June 2022. Okay, that was the explanation I wanted to give you. And we can see here that based on that particular price action, these levels here are no more important. Why had we marked this level? Let's go back and check. We had marked this level because this level was a supply zone coming from the 31st of May as well as the day. Okay, let me just check. Yeah, 31st and the 30th of May 2022. You can see how price had come down from here, and then it had fallen from here on the 31st, and then it had not reached it yet. But now when it comes back to that area, you can see how price has, or that area has not really acted as an important support. Usually I say, right, that the supply zone will act as a support when price comes from the top, but none of these zones are really important when such price action patterns happen, because traders themselves create this sort of price action by going long. And that is the psychology explanation behind, or rather the explanation of psychology behind such tremendous falls in price. Okay, so we will just adjust and add levels here. We do not have any virgin CPR. This CPR has been broken into. You can see here that the 2:55 p.m. candle broke into that CPR, and you can see these cluster of candles inside it. So there is no real virgin CPR on that day, and we do see a very important supply zone here. So we'll mark it here in red. That supply zone is super important now, because that is where profit booking has started, right? So there will be new short positions created in this position also. You can see the wick here in 15-minute time frame. So new short position will be open at this point. So whenever price goes back to that level, you might be able to see another sell-off from there also. It might not be this deep, but there might definitely be a sell-off from there. Okay, so we will be extending these levels forward. We have a very old virgin CPR coming from the 27th of May, which we will now delete. We don't need it anymore. Yeah, and we have a wideish virgin CPR, sorry, coming for the next, that is tomorrow's trading session. What kind of CPR is it? It is more than 60 points. So it's a wide CPR. Keep your bias towards the reversal sort of trades more than the breakout sort of trades. Breakouts are very difficult to be sustained anyway, and price anyway finds it difficult to sustain breakouts, because breakouts need a lot of buying or selling pressure, depends on which direction it is going, and that is why the sustenance is very difficult. But reversals happen very regularly in the market. Okay, so we don't have any other very important levels as of now. As far as this day is concerned, we have other important levels coming from previous days, and obviously the low of this particular day, the 2nd of June, is going to be an important demand zone. So presently we are between an important supply zone up top, which is this level that we have marked, 16,793, and we are at an important and between the level of around 16,443, which is a demand zone. So now we will head over to Bank Nifty and check the price action in Bank Nifty. And now here we can see that Bank Nifty has opened with a red candle. Now that day Bank Nifty did actually look very weak, and that was the reason why I was so confident there in the short trade at the second candle, or the candle that broke down out of the low of that green candle, because Bank Nifty had shown a lot of weakness since the beginning itself. You can see how Bank Nifty came down here, then this was the level or the zone that we had marked. You can see how it has spent time within that zone trying to break it. So as I had said prior, a few minutes before, this is where the supply zone was from the 1st of June, and then that level wasn't yet touched except for when it touched it on the 1st of June itself. but then that level was not touched from the bottom. Today it was touched from the top, and then as I had said to you, the level when a supply zone is broken is, or price approaches it from the top and it is unbroken, it acts as a support. So that is what we can get to see here. Now here price had opened outside the R2 pivot, but it opened with a red candle and a fairly strong red candle. So that's another good indication that the gap up might not sustain under such circumstances when there is such severe selling pressure from the top. So Bank Nifty would have fallen even further had Nifty not shown much resilience on that day. So Bank Nifty would have had an even further or a steeper fall than that, than what we can see here. Anyway, so we will be deleting this level now. All these levels must go. You can see how price action has opened outside the R2 pivot, broken that R2 as resistance, broken all these levels that we had marked. Then it broke the R1 also, and then it fell straight through to the PDH. And you can see how, as I was explaining prior, the DH, the PDH and the R1 pivot are close by here. So usually when they are close by, when one is broken, the other will be broken most often, but you have to ensure that both those levels are broken. Okay, so here if price would have bounced from here without retesting the PDH and would have approached PDH, again there was a chance that price might have taken a support from PDH, but no, that day if you have learned price action, then price action traders were very confident on that day that the price would collapse. Price action did not show any sort of strength that day. Okay, you can see how price was going sideways here, and I also tweeted at that time that Bank Nifty is either preparing to take flight or to crash, and it was preparing to crash actually from there. So this was a kind of a redistribution kind of a scenario here for all of you newcomers who are watching the video. Just explaining these concepts to you. Redistribution is when the price falls, then it goes into a consolidation kind of a phase where it's actually going to continue its fall further. So if there is a distribution when the price is going up like this and the price starts going sideways and then it falls, then this is called distribution. Okay, this phase here. But when it is actually coming from the top, it halts, takes some time here, collects some orders here, and this is for collecting liquidity. Okay, and it continues its fall downwards, then it is called redistribution, which we have written here. And Bank Nifty was actually going down again, it fell, and then again you can see that it kind of went into a sideways territory here. Again it fell from there, went sideways, and then it fell again. So let's see what sort of levels we need to be deleting or marking here. Tomorrow has a wide CPR. What kind of a CPR is it? Let me check. Yeah, it's a very wide CPR. It's nearly 200 points. That's 190 points plus. So it's going to be a very wide CPR. So don't expect the day to be a trending day and expect it to give you some reversals or even be choppy, or even I mean, volatility is there anyway in the markets these days, so it will be volatile anyway. Okay, the gap now has been filled. Once that gap was broken by this red candle, obviously it was going to close it, so we are going to delete that gap now, which was there since a long time. We do have a virgin CPR on the bottom here coming from 26th of May, which is a very old virgin CPR, and we are going to delete that level. We are going to see the 15 minutes time frame on this. You can see how steep that fall was in Bank Nifty. It has taken out the low of this particular previous session. It has taken out the low of the previous to previous session, that is the 1st of June also. And you can see that the levels here, the one level that is important again is the previous day high, which is coming from this area, the candle high here. It's an important area. And we do not have a virgin CPR. Since it's a one-sided fall, it gets a little bit tricky to mark areas or levels here. You could see that price was taking some support at this level here, and that was the previous day high. So we don't really want to mark that area. Okay, so even if this area has provided support, then it was broken here, then this candle has kind of taken a resistance from there, but still it was bound to support some provide some support, because it was this the 2nd June's high. So that area might not really be very important now. So just to avoid confusion, we will not be marking that area in Bank Nifty. Okay, so that is the price action in Bank Nifty. Yeah, one more thing I wanted to explain was, a lot of people or a lot of you might ask me whether this CPR breakout at this point on at 1:25 p.m. was a tradable candle. Then yes, this was a tradable candle, and I'll show you why. See, this is 1:25 p.m. right? Let me just take you to Nifty here. We'll go to the 5-minute time frame and let me just show you what Nifty was doing at 1:25 p.m. So you can see that Nifty was actually at the R1 pivot, and it was actually trying to it had broken the R1 pivot at 1:25 p.m. So after the R1 pivot in Nifty, you had a straight fall down to PDH. But as I had explained to you that whenever this first candle's low is broken in on such days, the fall is so severe that it comes and rests right at the CPR. You can easily just simply ignore the PDH, okay, the previous day high, and you can ignore that. So 1:25 p.m. candle, after that there was no support right up to the either the top central pivot or the central pivot. So yes, that candle in Bank Nifty was surely tradable. You could have gone short here and kept your SL on top of the CPR, because that CPR level was broken after a long consolidation, right? So after a long consolidation and a narrow to average size CPR and a breakout post some fight is a very good sign of bearishness if it's going downwards, and it's a good sign to go long, or bullishness if that is to go, I mean if the breakout is on the upside. So you could have entered on this particular red candle here 1:25 p.m. this low, or you could have waited for a slight correction up to the bottom CPR and entered at the bottom CPR, keeping your SL on top here. It wouldn't have been a very big SL, and then you could have taken your profit anywhere at the or near the previous day low, or even lower than that actually, because looking at the price action, it was evident that the previous day low was not going to be a very important day anyway. The price action had not really signaled us that the previous day low was a strong demand zone, so the demand zone was not going to be very powerful or a strong support on this particular day, because you can see that the price had really gone sideways on this particular day on 2nd of June and not bounced from there, right? So it was not a very strong demand zone at all. It was just a support. So when price approaches that support from the top, it was never going to be a very strong support. So I hope this is clear to you. I hope this video was useful to you, and I hope I was able to explain to you clearly why that price action happened on that particular day. So if you've liked this video, please hit the like button, subscribe to the channel, and hit the bell icon so you're notified each time I post a new video. Thanks for your patience, guys. Thanks for listening to all this explanation, and I hope you're finding these videos informative. Please do let me know in the comments section below, and thank you for watching this video. I will catch you in the next one, that is tomorrow. Bye bye.